Dale Pinkert here at TradeGATEHub.com, and we are sponsored, powered by TradeView Markets. Very intense week ahead of us as traders. You could choose to play roulette or you could be cautious. Let me tell you something, that the markets will be here after the CPI tomorrow and the Fed on Wednesday. Make sure your capital is, all right? So if you watch from the sidelines, it's okay. Not a good time to have FOMO. Here are my thoughts, here are my views going into this. Just a quick review. Last week, I talked about the potential of a bear raid in the S&Ps. It was a very negative week. If you look at the weekly candle, we were down about 130 handles in the S&P. So the question is, where do we go from here? Last week, I thought there was a possibility for 3,700. Can't rule anything out. I do think that the Fed is going to follow the market because I think yields are going to recover in the 10-year back to about 380. That's the title of the interview. So let's take a look at that. I don't see that being supportive of the market. We're down pretty good here, but I want to show you something on a shorter term fractal. To me, it looks like we have the beginnings of a head and shoulders bottom in the 10-year. So, on maybe a decent CPI report, maybe we, pull back to form this right shoulder. But the measured move over 360 is going to take you to 380, which is really just maybe a 50% correction of the recent decline from 440. So if yields go up, I think it should be supportive of the dollar. Although, here's my comment from last week. With all the risk off we had in the S&Ps, and you look at it maybe on a 4-hour, you'll see it was pretty dramatic, right? And we're holding this moving average here on the 4-hour, which I think we'll take out. The question is, do we get one more pop up towards 4,000 first? And then there is some support around 38 to 38 and a half. So while this was happening, big risk off in equities, the dollar made very little hay out of this, okay? I mean, here we are in the pound, still up around the highs. I thought we were going to have the beginning of a dollar correction. We had a little bit of a sell-off in cable from last week, but, it certainly doesn't give up a lot of ground. It held 121.5, and here we are challenging it again. Similar scenario in the euro. Euro looks a little weaker here than cable does. And I think all we're going to do is get a pullback from this very significant, as I showed you, major support in the DXY. This 104 level. Look, we have moving averages coming in here, and you would think we'd at least get some type of recovery, maybe back towards 106. But so far, last week's action was not impressive with risk off. So I think that we're going to have a bear market rally. It may not be the beginning of a bigger correction in the dollar, but maybe we just get a rally back to here and then flush one more time to 92. And the reason I'm saying that is that would really turn the market real bearish a dollar. And perhaps that's a time when the dollar starts its recovery. Very unusual for a market to top when momentum was confirming the new price high, which is what happened in the DXY up here. So we were up here and momentum was over 80. We were making new highs in the RSI while the dollar made a new high. So there's going to at least, I think, be some type of echo rally. From here, I think that we could rally 61.8, 78.6. It could take us back towards this, 110 level. So, keep your powder dry. We're near the end of the year. Some of the bigger moves and campaigns will start next year. But I do think before we get the bigger correction in the DXY that we could take out 94 first, turn everyone real negative. That's going to maybe mean 107.90 or so, 107 print, at least in the euro. Pound, I think, is the one that when we finally do correct in the dollar is going to lead it. But perhaps we have one more high in here this week as well. So not a lot of conviction on what to do in the currency complex, except for the yen. because on the pullback last week, we held the 50% retrace here. No, it was only 38, so real shallow. And if the dollar bounces, I still think the yen can recover up towards 140. And that would tie in with the correlation of a move towards 380 in the 10-year. If we get up to 380, I think you're going to see a 140 yen at least. And then something I haven't talked about for a while, but you have the whole world negative WTI. I started buying it last week. If you're in our trading room here at TradeGATEHub.com, you got to buy about 150 pips ago. Took partials, think 76 is very viable. And then I also want to show a couple of things on where I would be looking if we get a pretty good break in the S&Ps, we get that flush I've been talking about. What do I want to do? Well, first of all, I want to see Apple wash out. Okay, we have a descending triangle here at 140. Okay, it depends where you take it from, but if you just take it from 150 to 140, it's going to give you 130 Apple. You know, if you want to take it from 52 or so, to me, this right here looks like a descending triangle. We're going to flush. I want to see these lows flushed out in an Apple. I want to see lower prices in the semis, which I think are going to be a good group to buy. Let me just find the semis for you here. They're somewhere. Oh, here, I see them. Okay. So this is a real interesting chart in the semis. You know, we stalled up here. I think that if we get a gap fill down here between 200 and 190, I want to be a buyer in the semis because I think we're forming an ascending triangle, and eventually we will break out over the 230 range. So the semis look good to me. Just a little caution. I know gold's down today, but you know, last week it had a pretty good week and the shares really didn't perform. Here's, you know, one of the leaders is Newmont. And Newmont last week had a pretty negative week here. It's holding up okay so far, but I would wait. You know, you could get one more blast towards 50, but you have some 3 drives developing. I would hold back after a run like that we've had there. GDX, similar situation, you know, where I would like it at 26. I'm not going to chase it up here. And even some of the silver shares, with silver really exploding last week. What happened to First Majestic? With silver exploding, making new highs? What happened to SILJ? Not much, you know, it's trying to come back here today, but some of the silver shares really not performing. So I think there's going to be a better time to buy. I'm very bullish long term, very bullish, you know, where I think we could see numbers like $60 silver. But in this environment, I'm going to wait for a better entry. And that means that I have to sit on my hands. I may not trade a counter trend. In fact, right now, while we're talking, it looks like the pound is getting ready to start fading here. So again, looking for the dollar to rally because the Fed is going to be mean this Wednesday, especially if the CPI is not a good number. Keep an eye on the crude. Also look at the VIX. So the VIX is performing, gapping up here. So they're worried about something here in the S&Ps. So if you heeded what I talked about last week, you don't have to worry about it. In fact, you have a nice lead if you shorted it. And that's about it. Remember that to try and take huge positions in front of these red events is roulette. Be a trader. And that's about all I have to say right now. Let's see what happens with the gold. Looking pretty weak. Right now looks like a failing rally in gold. So be careful about your being too bulled up in the precious metals, including the miners. Consider what's happening in energy. I like the commodity itself more than the shares right now. So this could be a pretty good bottom setting up. be careful in the S&Ps because I think we'll see at least this moving average challenge at 38.5. That's still about 80 handles from here. Want to wish everyone good luck. Before you click your mouse, know where you're wrong and put your stop in and trade small and reduce leverage. New Year's is not too far away when we have more liquidity coming back into the market. So trade smartly, be tactical. December is no time to start building up a campaign position. So I hope, hey, let me give you some more advice. Wear a mask inside, not in your house, but anywhere outside. And it's not a COVID thing. Flu's pretty bad. In fact, if you got long NyQuil last week, you did pretty well, because go into any of your pharmacies right now and try and find a bottle of NyQuil. America is coughing and sneezing after Thanksgiving. So good hunting, everybody. I'll be back with you on Wednesday, and I'll be back with you tomorrow with Mike for our week ahead. We'll have already had the CPI. And check out TradeView. Tight spreads, trade the whole universe. And don't just count your pips.